Okay, traders, welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, November 26th. Mike Boutros with you on the horn this morning. Last webinar before the holiday break. So lots to discuss today. Good to see you in the room, Steve, and everyone here this morning. Sorry about the late delay getting started. But let's jump right in. So right on the menu for today, we're going to go over all the majors. We'll hit DXY, Aussie, dollar, yen, euro, Swissy, sterling, dollar, CAD, Kiwi, and we'll circle back and hit gold and see where we are heading into the break. Caution here, again, is warranted heading into the close of the month, heading into the close of the week, thin liquidity conditions taking over pretty much from tomorrow. I think today should be all right, but tomorrow, midday, you'll start to see those liquidity conditions start to thin out. Just a really, precarious time to be intraday trading. So doesn't mean that there's not going to be moves. A lot of times this thin environment can offer some really big swings in intraday price, but definitely you want to be a little bit more poised, a little bit lighter on the position sizing. All right, let's jump right in. Any other questions or trade setups you guys want to review? As always, feel free to throw them on the message board at any time. Here's where we left off. I want to go off real quick with the DXY before we jump into any of the majors. We're seeing some signs of exhaustion here. I've been eyeing this near-term divergence that we made on that rally yesterday. You guys know where we stand on this. Just a quick top down again. What matters for the close of the week essentially still remains the pivot around 97.87 support. We talked about this at length yesterday. I think everyone here in the room was in the Daily FX webinar. The major resistance still remains that high week close 98.84. So we're kind of still in nowhere land here. But the focus still remains on this key range in price. On the daily chart, the 50% retrace is still continuing to hang up the resistance here on the upside. Keep in mind, again, we went over this at length yesterday. It's the objective monthly opening range high. So again, you only got a couple days left on the month. If this thing pops through this, it gives you objective up bias or an objective long bias heading to the close of the month. So it's really all about whether this failure here holds momentum just below 60, right? There's just so much to look at from the technical side that it keeps you timid as far as trying to press any major dollar longs. Here's what it looks like on the DXY intraday. Okay, there's the objective monthly opening range highs, converges on the median line to the opening week, and that's why we were looking for exhaustion ahead of this. I don't know what this is. It's not a very conviction strong signal. But at the end of the day, your Monday, Tuesday stretch is there. So you have an opening range set right above support, 98.13, 98.15. We talked about that yesterday. I'm going to choke up bullish invalidation to last week's opening range highs, and that takes you into 98 essentially. So, there's that opening range high last week. You tested it again Thursday, Friday break, gave you that stretch into the end of the week. Here's another opening range set just above that key support zone. So cautious. All things held constant, guys. This thing's unchanged for the week, literally. So no assumptions made here yet. We're still looking for possible exhaustion on the upside. Here's DXY. Here's DXY. Not much of a play, to be honest with you, from right now. It's either one push more into 98.45 and failure, or the breakdown to 98 and look for a reaction there. Eman says, hello, Michael. I'm really sorry for being always late. No worries, Eman. I was late myself this morning. We launched the webinar a couple of minutes late, so you didn't miss much. But that's kind of the picture I'm looking at here for DXY. Euro looks like this. So I guess we should go over last night's update in its entirety, but let's just hit Euro real quick first. Here's what Euro looked like 2 days ago, right? We were heading into this key support zone, 110.51, 110.15, 110.12, and that was converging on upslope resistance as well as downslope support, upslope support rather, and downslope support. So you had a 786 right there, 1618 off the high. You dribble down into the median line. Here's the pullback. Very similar to DXY. You're essentially unchanged, a little bit higher on the week. weekly opening range taking shape just above support. The euro trade, I think, is more interesting for me for the exhaustion side because of the key pivotal level that we're coming into. So 98, 109.94. Y'all heard me talk about it before. It's that key long 618 from the advance off the lows in October. The 618 extension, we talked about this yesterday, of the decline comes in just below 109.81. Just a really nice zone. So look, I'm looking for the exhaustion low. If the opening range lows for the month hold, okay, that still leaves room for that drop into 109.80. At the end of the day, it's a very clear downslope. You just have to keep focused on this near-term slope that we've been following. This is just off the highs from October, right? Really clean. Topside breach is needed to get the resumptive trade higher in euro. Till that happens, you're at risk. Okay, we're just coming off of downslope support. So could we get a rebound here? Sure. Could the rebound get as high as 110.47? Sure. That's where we need to get out. And that's the breakout of the parallel that we need to kind of validate a larger move. Again, if that happens, the same levels in focus, 111.04, 111.09. It's a big zone of resistance, huge pivot zone we've been following. And that would essentially necessitate a test or a breach of the monthly opening range highs. So this thing is poised. This thing is poised. Any questions on euro before we move off? I'm going to kind of breeze through these today, guys. We're not going to spend too much time on them. I'm mindful again of the environment that we're trading in. Personally, my book is really light at this point. I don't know if I'll be putting anything major new on, but kind of just a good time to step away from the markets, to be honest with you. Enjoy some family time and be thankful. When we come back, there's so many things on tap into the start of December. I think it's going to be a really fun month. So that's the Euro and DXY 1 and 2. Let's jump into last night's updates. Here was on Aussie, number 3. So here's what Aussie looks like on all the time frames. The major low week close support at 67.68, still the level that we're looking for as weekly support. Here's what the update looked like last night. The low we closed, all I wanted to note here on the weekly chart, the low we closed for the year, 67.68, that's still holding support basically for the last 3 weeks. We'd need to see a move above 68.55, 2016 low we close to kind of validate a break of this channel on the longer term for the weekly chart. Here's the daily. Oops. Okay. Same slope off the highs from July and January 2017, 2018. Still within that same slope series. Just wanted to highlight that 618 of the advance, 67.69 is what's holding the lows. That's also the objective monthly opening range lows. We hit that on the 14th, continuing to hold that region. Intraday, here's the focus. So to start off the week, this is sort of a nice setup because, again, the weekly opening range is taking shape just above support. So you got a clear-cut, decisive stop on any long exposure against the lows. If we break the lows, you got a clear-cut, decisive stop, essentially against the weekly open is what I wanted to play. Obviously, overnight we surged through, but we essentially covered the entire Monday range with that one candle last night. So putting more emphasis, right, on a break of this immediate range for guidance. If we get the downside move, the risk is really 67.45. The slope comes in just ahead. Not the favorite scenario. I want to see sort of an exhaustion sort of test here and then a break higher. I don't know if we just missed it with this singular spike, but at the end of the day, if we get an opening range break to the upside for the week, watch a breach of 68. That's just a nice pivot in price. Objective high from October, low on the October swing, decent pivots and a sail through, converges on the median line, basically into tomorrow. So that's for me going to be what we'll need to see breached to validate a larger reversal in Aussie. That being said, we need to clear downslope resistance before we start getting all cavalier about trying to get try a call low on this thing. So still on the sidelines, still on the sidelines. I wish there was some more clear-cut, definitive tell on momentum. I was stoking this out all morning. This thing is like hitting 50 on the RSI signature on like every time frame. So we're not there yet, but we're on the lookout. We're on the lookout, and we might not get it, guys. Again, this is not a very conducive environment for strong intraday positioning. So ideal scenario, you still see downside exhaustion either on a stab of 67, 69 or lower, or you get the reversal break and the push through the weekly open again, and breach of the weekly opening range highs. The problem with that is that the stop would be too far off, in my opinion. I'm not going to put a 50 pip stop, 60 pip stop on this personally, but we'll have to cross that bridge when we get there. We'll have to cross that bridge when we get there. Ideal scenario, again, we're looking for sort of an exhaustion low here. Questions, comments, concerns on Aussie? All right. That's number 3. Number 4, believe it or not, the abomination actually was spot on yesterday. I hope I hope one of you guys took this trade yesterday. It was spot on. So the idea was regions of resistance to look for. Okay, this thing was coming up against big levels. I'll start you off on the weekly chart with just this huge zone that we've been watching at 109.36 into 109.68. That's still a major pivotal ceiling, in my opinion, for the dollar yen rally at this point. 618 rally, 618 of the yearly range rather, and the 2019 objective yearly open. Also note the highs that we spiked back there in July on that outside weekly reversal. All converge up here. So on test and pullback, yeah, sure. This is the zone you'd start to look for failure. Momentum was coming up against 60. So we wanted to see a larger pullback. We talked about that briefly last week. We got the pullback, okay? That came into support. 108.30 was the big zone that we were looking for. Last night we noted expectations for 109.22, 109.35 to look for an exhaustion high there. I think it registered a high at 20. What was it? 109.20, fractional 6. You know what I mean? Really nice moves. Right up against former slope resistance or former slope support turned resistance. And certainly from the intraday standpoint, you had that 786 retracement up there as well. So, looks awfully provocative, right? A good zone to start to look for possible exhaustion. Again, you don't want to get too aggressive on any major abomination. The abomination is giving us a blessed Thanksgiving, says E-Man. It's something, right? I'll take it. From dollar yen, sure. So the move looks clean. Don't want to get too aggressive on it. You want to tone a little bit down as you start to get into the 38.2, which we just skirted. Yeah, just a hair below. So look for something there, but essentially the ideal scenario would be a move back below weekly open. The weekly open 618 of this advance actually covers the weekly opening range low, which puts an emphasis, on a move through here to validate sort of another push lower in dollar yen. But this is the zone. Don't put it past this thing. It is the abomination for a reason, to make another run into that zone for some reason, try to wash people out. But, ideal scenario is we kind of see failure against that high we just made into the US trade session, and the move below, 108.85, let's say, gets you the resumptive move into that 618 weekly open support. At this point, I would want to say get rid of the 618 just to keep the chart clean. Focus on that. And I'm going to drop that 52. There you go. A little abridged on the levels. Okay, so from last night, we turned right ahead of this. Just go ahead and clean up that 618. Add a stretch of that near-term rally, and it'll give you these levels right here. But looks good. I mean, it failed right in the spot that we wanted to. So all things held constant. Let's see if we can't get that drive lower here in dollar yen. Questions on the abomination heading into Thanksgiving? See if we can't get that exhaustion point still holding 109.35 is the ideal scenario on any major stretch. I mean, beyond that, you're looking at like the yearly open. So I like exactly where this turned. Let's see if we can't get a drive lower. We'll take a quick segue just to cover last night's update on gold, and then we'll jump back into the crosses, guys. But here's what gold's doing into the week. You know, at this point, the weekly opening range is taking shape just below resistance. Talked about that here yesterday. The focus is going to be on that 1451, 1461 region. Interestingly enough, that key support zone that we've talked about for so many months, you know, we've cleaned it up. I told you guys yesterday to carry just the low close that we made here on that reversal day, which is 1458, 1451. But you get the picture, right? We've talked about this zone for so many, what, weeks now, right? There's that key support zone. This is now the weekly opening range, 1461, 1451. So just dating back here to the 17th of the month, we were watching that key zone on the weekly chart. Now the entire weekly opening range is defined by that zone. So we're looking for a break of this. I told you guys yesterday, I'm still on the like neutral stance here, sideways to lower, looking for an exhaustion point. So you know, if you're holding shorts, 1451's max threshold limits, right? We shouldn't have even actually sat in it that long. If you're looking for a long position, you know, we're looking for a low to fade. Right now it would be against the low that we made back here earlier in the month. That's 1445. If you're open to take a $10 stop, that's on you. I still don't see per se the signal for the reversal pattern yet. So could get another drive down lower. I wanted to highlight on the daily chart that you do have this interesting, you know, slope that we talked about yesterday converges on the 25% line for the down slope. That's like a little lower at that 1445 level. So to try to fight this downtrend without a signal against that low, it's just not there. So looking for exhaustion, again, same kind of story that we started the week with. If we drive lower, looking for that kind of spike, that exhaustion low into slope support, maybe 1445s max. Ultimately, a 1461 break would be sort of the start of a resumptive move. Now, 1461, not only is it that 100% extension and all that good stuff that we were looking at back in the day, I left it here on the intraday chart. It's also the objective weekly open at 1462. So we're going to watch this region. We're going to watch this region as sort of the near-term bearish invalidation level. We get a break above this, look for a little bit larger of a rebound. Can't validate a reversal until we get some legs above 1470s. We'll cross that bridge when we get there. But that's what I'm thinking on gold. That's what I'm thinking on gold. This is big weekly support, big daily support, monthly range lows. You name it, it's there. We need to find some support and find it quick if this thing's going to have any hope of making some sort of recovery here near term. Any questions on gold? All right. Dollar Swiss, number 6. Here's what Swissy looked like last night or earlier in the week. So it hasn't been able to really make the break validate with a push higher above 99.80. Look at this consolidation pattern. This is what we highlighted on Sunday as this thing was, broadly kind of just consolidating here on Friday. The break and the run that you got on Friday did clear slope. It's only a 2-point touch, so we're not going to stress that. But the October Open objective 99.78 level held as resistance. We held, into the open of this week. We did probe above, and we kind of been jackknifing here, but it's just not able to find any firm footing above that level. Here's dollar Swiss on the intraday, right? That's as coiled of a weekly opening range as you get. There's not really much to say here, guys. If you get the breach above, you got the clear-cut target at 10016. That's your 618 retracement of the drop. Downside move, if you do get the break lower, which for me, the kind of failure exhaustion was the play. But if it does break lower, you're looking initial targets 99.28. I told you. It ends up being like a 38.2 just above, right? 9940, 9932 is 9930 is what I told you guys is initial target, but you get the picture. I'm split on this. I'm split on this. I think this is the one to choose if we do get continued dollar follow through. But the same respect for the fade, you're primed. You're at the monthly objective opening range highs, unable to push through the monthly opening range highs. That's an objective failure. If the weekly opening range breaks lower, you look for the push lower. Very simple. A boring trade, but just wanted to highlight no change to any of the levels. We're just looking for clarity on this, and we're looking for a move to give us some guidance. All right, so that is dollar Swiss. A little bit more exciting, and I know that Jamie's been looking at this with great interest, is sterling. Okay, guys, the levels are pretty clean, but we're still holding the range. So here's what we said on the sterling here earlier in the week. If this break was legit, right? This is kind of was the question. We were looking for failure ahead of 29.29. That's exactly what we said on Friday, into the start of the week. So here's the start of the week. We found the rebound, took out 28.86. Failure ahead of 29.90, right? We got as high as 29.13. And here's the pullback. We're still in the weekly opening range, so you haven't gotten the validation yet. And you're still above that near-term support at 128.18, 128.37. A little bit bigger of a range, but it's sterling at this point. You got to keep that in note. So my point being is you have an opening range above support. You get the downside break below 28.18. I would look for a larger dump near 27.50s, 27.40s, but that's the risk if you see the downside break. What else did we want to say? Top side levels unchanged, 29.29, still going to be that Friday high. Obviously, you guys remember 29.90. That's the breakout zone for the multi-week range in sterling. Sometimes it's kind of just best to zoom out and just take a objective look at price. And here's what it's looked like on the daily chart. I mean, this thing is just, we got to get some clarity, some capitulation. Ideal scenario, again, this is sort of a near-term consolidation, maybe another jackknife towards the early open, but ideal scenario is you're looking to fade weakness for the resumptive move higher. 130.77, still the same level we've been talking about for a couple weeks now, guys. That's 786 retracement of the entire yearly range. Still converges on upslope. over the next few weeks. So no action just yet. Watch the fireworks start on the Thanksgiving parade or something. I don't know. But right now, as of now, guys, it's just ranges at major pivotal levels. Okay, near monthly opening range highs, near monthly opening range lows, near multi-week range lows. Um, range is the name of the game right now. Okay, so that's sterling. Number 8, dollar CAD, and then we'll hit Kiwi. And that should be it. If there are any other questions, you guys let me know. Here's what dollar CAD looks like. Another one that has given us nothing this week just yet as far as a signal is concerned. So some slight divergence on this advance. We're looking for exhaustion or a choke point. We talked about this in the webinar yesterday. You have that high day close at 133.35 and the 618 at 33.55, both levels of interest as a really nice zone of resistance. You saw it cap the advance in October. You saw it cap the advance on a close basis, at least here in September. Um, that's key resistance. So markets just don't seem to have any juice in it. Looks like everyone's taken off already for the Turkey Day. Dollar CAD formation super clean, just no momentum. Questions, comments, concerns on dollar CAD? The one level I would add in this range here, guys, at this point, just watch your weekly open. And the only change from the update, our last update here on dollar CAD, is the bullish inval. Okay, we choked that up from that lower parallel, was just below to start off the week. Now it converges on that exact 618. So choke it up to that 618. Also Friday's low, 32.52. Okay, weakness beyond that level is what would validate the reversal or a near-term pullback, at least in dollar CAD. Any questions on Loonie? Not much to update on here. Okay, last but not least, another one that doesn't have much fruit on it yet is Kiwi. Guys, we talked about 64.24, 64.28 last week. It's still the level to beat. I'm going to take it back to the daily chart and just show you how critical of a region this has been. You guys have seen this before as well. 38.2, the drop off the July high. You got the 2018 swing low. It's been unable to clear this on a closed basis since October, right? It's still the level to beat. It's still the level to beat. Ultimately, if we do see the crack, you're looking for the rally towards 64. It's just shy of 65, 64.90, 64.85 right here. Really, really sweet spot. You got to clear this range. You got to clear this range. And we've been talking about the fact that the topside exhaustion or the topside had been at risk while below that. So last week, the idea was to fade levels or to fade rallies against that zone. I'd be inclined to do that, save the fact that this thing has made a full round trip weekly opening range into that region. Momentum is at 60. The trigger is clear here. The trigger is clear. If this thing pops 60 in momentum, price pops 64.30s, okay, on a closed basis, or even intraday on the opening range for US trade, you're looking for the extension. Initial target would be 64.50, okay? It would be an objective opening range break, and it would be a key resistance level that we've been watching. I want to be mindful of the fact that we've tried this before, but an interesting look back at this shows you that the last 2 times we tried it, you knew you were wrong pretty quick. For us, we were looking to fade it, so it worked out pretty well. But for the long side here, if you're going to try to play the breakout, you'll know when you're wrong pretty quick. Outside reversal candle in the 2-hour took you right lower. That gave you a decent correction. Outside reversal candle again on the 2-hour on the test and break of that same exact level gave you the whiplash. So my point being, if we're going to try to break here and fail, I think you're going to get the signal. You'll know you're wrong pretty quick. For the exhaustion trade, if you're trying to play the short, again, the signal should be there on the pullback. You're just going to take a stop against that high and try to play that correction lower. So I'm looking for a reaction right here into the US trade session over the next hour or so. See if it works out. Questions, comments, concerns on Kiwi? I don't know if it was efficiency at its best or just the fact that we didn't have much to talk about today, but that wraps it up from my end. Did it in about half an hour, not bad. Any other questions or trade setups, guys, let me know. Quick look around just on things that I've been kind of scoping out this morning. The crude trade, watch that 58.62 level resistance. We've been following this one really closely as well. Big level, okay, big level of resistance for crude. So if we're able to make it through 58.62, the objective zone high that you're looking for beyond that is 60 into 60.45. That's the 2018 open, last year's open, and a longer-term 618. So again, one of those trades, and all of these trades testing extremes, right? Whether it's weekly extremes, monthly extremes, basic resistance, 618 key resistance extremes. It just seems all of them are testing really provocative zones into the close of the month, week, with a holiday ahead. Hey, lighten up loads on anything that you're taking from here on out. Okay. Well, if there are no other questions or trade setups you want to review, guys, we'll go ahead and wrap it up here. I want to take a moment to, I'm a little tongue twisted today. Want to take a moment to wish you all a very happy Thanksgiving, a safe and blessed holiday together. We'll pick up things again next week on the webinar. So obviously Thursday webinar we won't have anything this week, but we'll pick things back up again on Monday on the free session, and then Tuesday and Thursday. As far as the scheduling is concerned, I don't foresee that we'll get anything out for a Friday print, guys. So listen, if you're going to trade on Friday, just be mindful and be super light. Markets never are closed for 4 days in a row, so there's going to be thin liquidity trading, and I'm sure on the last day of the month should be a doozy. Okay, so I'm not going to necessarily advocate for any new positioning then. And then we start the open of December, guys, and it should be a really awesome month. Look forward to closing off a strong year. So best of luck trading for the next couple of hours here, next 48 hours into the holiday. And again, enjoy your long weekend, guys. I will see you. I'll have an update out later tonight, and then we'll pick up things next week. Cheers, guys. Thank you, Amen. Says, may all the good things of life be yours. Happy Thanksgiving Day, Michael. Same to you. Same to everyone in the room. Cheers.